Good morning, everyone. You are watching a live daily market outlook from Windsor Brokers for Wednesday, 24th of April 2013. Rather quiet overnight session preceded some action that develops now at the beginning of European session. The euro held steady around the 130 level following yesterday's sharp pullback and the crack of important and psychological 130 support that dipped as low as 129.72. Sterling against the US dollar remains steady of 152 base, where yesterday's dip found support, and the subsequent recovery, though the price followed, but the price still holds within 152-153 range, and the break of either side is required to give the immediate direction for the pair. Currently the price is around 152.50, but prevailing negative tone still seen on the lower time frames keeps the downside more focused at this point. From the other side, the dollar yen is back fully to strength following a previous 2 days ago failure at psychological 100 barrier and subsequent pullback down to 98.50, where the fresh strength was regained, and the pair moved above initial 99 barrier, and so far trading around 99.65-70, which are the session highs. The significant thing was last night's false tweet that came from Associated Press. Later on proved to be the hacked Twitter, saying that 2 bombs exploded in the White House or so, whatever was the story that sparked a sharp fall and the spike of the dollar yen from levels at approximately 99.30 down to 98.57 was the lowest. But after the news confirmed to be false within a minute, the markets returned back to their original levels and continued their initial directions. As said, the dollar yen remains so far well supported, and it's aiming towards 100 psychological barrier in now third attempt seen in past 1 week to clear this important barrier. From the other side, Aussie dollar remains under pressure. Yesterday's fresh low was posted at 102.20, and subsequent recovery stayed capped under initial 103 barrier. Gains were limited at 102.74, with overnight's release of soft Australian inflation data putting an additional pressure on the pair, hitting the session low at 102.30 and currently holding at around 102.40. That still keeps the downside focused as a part of the larger downtrend of the Aussie dollar versus the US dollar, and basically the focus remains at 102.20, 102, and the larger range floor at 101.14, beginning of March low. Commodities remain well supported for now, as gold regained again traction following yesterday's dip to 14.04. Currently price holds around 14.30 and is back on the strength for a possible retest of 14.27 resistance has been taken out, 14.32 and 14.38 recent highs are now in the near term focus, while crude oil is again back to strength following a bounce of 85.90 low of 18th of April, and the subsequent pullback of the high of the recovery from 89.45 down to 87.82. Currently price holds at 89.85, approaching psychological 90 barrier, as the initial resistance at 89.50 congestion top has been cleared. Now more focus is seen towards the upside for possible stronger recovery of the oil price that fell significantly in past 3 weeks from peak at 97.68 down to 85.90. Quick look at today's calendar before we go to the technicals. Just reminder, we have a small technical problem with the time, so all the times showing on the calendar are have additional 1 hour to the original GMT time. So just be aware that these are incorrect times. Take 1 hour out, and you will have the proper time. As said, at 1:30 GMT, the Australian CPI data were released. Quarterly CPI the inflation came at 0.3%, below the forecasted 0.7%, but still slightly above previous 0.2%. That might trigger again action of the Australian Central Bank for possible further monetary easing. That, as some commentators said this morning, they don't need much to decide and do these things. Trimmed means CPI. That's the Australian name for the core CPI for quarterly is came at 0.4%, again below the previous release at 0.6% and forecast at 0.7%. Switzerland UBS consumption indicator released at 6 o'clock GMT came at 125, more or less along with the previous release at 126. Still to come at 8 o'clock, important release from Germany, IFO business climate. Forecasted slightly below the previous month release. That was 106.7, 106.4 is today's forecast. Now this is again going to be a quite significant release, and they will have to keep an eye on this, as yesterday's negative, disappointing PMI manufacturing data that came from Germany and Eurozone pushed the single currency significantly lower. Now the second release from Germany today is going to give us a more clear picture of impact of the current slowdown of the German economy. CBI realized the sales from UK due at 10 o'clock GMT. 7 is the forecast compared to unchanged 0 previous release. And then releases from United States durable goods orders due at 12:30 GMT are forecasted at minus 2.9, quite significant drop from 5.6 previous month release. While core durables are forecasted in the positive way, 0.5% on a monthly release compared to minus 0.7 of the previous one. Crude oil inventories are due at their regular time at 14:30. This time is correct, so half of the calendar seems to be under drugs and the other half is working normally. 1.8 million barrels build is forecasted for today. For the previous week, compared to the draw of 1.2 million barrels seen in the last week. And basically this is all seen for today's calendar. Not to waste more our time with the fundamentals, let's move to our favorite part, which is the technical part, and see what we can expect from today's action. The euro remains pressured despite still present risk-on policy, as yesterday's recovery attempt was short of 131 barrier. 130.83 was the highest seen, and then a sharp fall seen after release of disappointing German and European PMI data, especially German one dipping as low as 129.72. Now we are talking about 50% retracement of the rally from 127.44 to 132.00, where the temporary support was found, but seems, according to the current price action, that this will be short-lived action, as upside was capped during the yesterday's US session at 130.27, and the pair stayed in the quite narrow range and quiet trading during the Asian session, with acceleration seen again towards the downside at the beginning of Europe. Breaking below 130.00 again sees immediate focus at 129.72 as initial target. Then we have another series of good supports. 129.30 is the 200 days moving average as shown on the daily chart. Also important to mention that now completion of the bearish diamond pattern in expected way signals further reversal and a possible end of the current recovery of 127.44.50 double bottom, with the break below, as we mentioned in previous sessions, break below 130 required to confirm this. This already happened, so we have 129.30, the 200 days moving average, and the 129.18 61.8% Fibonacci retracement of rally from 127.44 to 132.00, keeping the downside in focus with the bearish crossover of 20 over 55 days exponential moving averages, putting additional pressure on the pair. Support initial resistance now stands at approximately 130.40.50 zone, and then we have yesterday's high at 130.83, a break above this and the 131, as well as high of last Friday at 131.27, along with the previous highs of 11th of April, is seen required to shift the focus towards the upper targets. That looks quite unlikely according to the current configuration of the technicals, as sort of head and shoulders pattern shown on the 4-hour chart, that where we has been completed on a break below the 130 neckline, and sees now more potential for further reversal. So we have basically double signal head and shoulders and diamond pattern, both reversal patterns, showing that downside is seen favored at this point, with the break of yesterday's low at 129.72 seen as initial confirmation for further extension lower. As we said, for the sterling, it's off its recent lows and the near-term base at 152.00, currently at approximately 152.50, bouncing off the session lows at 152.35, though still entrenched within 153 on the upside and 152 on the downside range. The hourly structure is neutral to negative at this point, as the price holds slightly above 20 days moving average, but unable to break the 55 days one on the 1-hour chart. On the 4-hour chart, the more negative tone is still seen present, with the price action being limited by descending 20 days exponential moving average, and a series of lower highs defining the downtrend that so far reached 151.95. This is yesterday's low. Failure to clearly break 152 base has triggered this bounce higher that so far stays limited under initial 153 resistance. As long as this level stays intact, we might see more downside risk as a part of the larger pullback from 154.10 peak of 11th of April 2013, with the 151.78 seen on a break below 152, 151.95. That marks 61.8% Fibonacci retracement of recovery rally from 150, of the upleg from 150.32 to 154.10. Larger picture outlook, bulls are still in play following a recovery rally from 148.30, 12th of March low. That so far retraced nearly 38.2% of the larger 163.80 to 148.30 descent, where the gains so far stalled, and basically we are in the consolidative mode so far, as the structure remains positive, with the bull trend line drawn of 148.30 through 150.32 so far contains the pullback from 154.10, and this keeps upside still in focus, keeps hopes of possible fresh strength that will be built up from the current congestion, and the possible attack at 154.10 and 154.22 Fibonacci resistance to possibly resume the recovery and open next levels somewhere around the 155 zone. Conversely, break below 151.95, 152, where is also the trend line support, would be initial signal of a deeper reversal and a deeper corrective action of the current rally that will look, as we said, 151.78 and then 151.21, 76.4% Fibonacci retracement. Or if we take the larger picture from 148.30, then we'll be looking for test of 151.20. That is basically double Fibonacci support. Hourly is 76.4%, and 4 hour is 50% retracement of the rally from 148.30 to 154.10, break of which is again seen as a additional signal for a deeper reversal. That will also confirm the top at 154.10 peak of 11th of April 2013. And our top performer, dollar yen, is back to strength. Repeated failure at 90 at 100, the barrier 99.86 insofar it was 2 days ago, and subsequent pullback found support at 98.50, 98.47, exactly the low yesterday, followed by recovery through 99.00 that so far peaked at 99.74. This was overnight session high. Yesterday's false tweet that moved the market is shown here. It was approximately at 20:05 local Cyprus time, or 17:05 GMT time, when, as we mentioned at the beginning, false tweet came from Associated Press quoting that 2 bombs exploded in the White House, pushed the market quickly lower. Some 80 pips was the fall of dollar yen, but once the investors learned that this was false, market returned to their original levels and directions, and they keep the focus at the upside. The near-term structure holds a positive tone on both 1 and 4 hour time frames, and sees the upside in focus for a possible third attempt at psychological 100 barrier, with the set technicals being positively aligned and supportive for this third time event of attempting at 100 yen barrier. On the downside, we have immediate support at 99.00 as round figure, and then 99.20 is the low of overnight session low, and then 99.00 is around figure support ahead of more significant yesterday's low at 98.47. Loss of the later would have more significant impact at the near-term price action, as break lower would again weaken the tone and shift the focus towards the downside levels. And from currencies, the Aussie dollar is, Aussie dollar is the last one. Remains under pressure, as we said. Recovery attempt seen on yesterday's fresh low at 102.20 was short-lived. 102.74 seen. 103 initial resistance stays intact for now, and a soft inflation data that came during the night from Australia put additional pressure at the pair, keeping the focus again towards the downside. The negative structure of near-term studies on both 1 and 4 hour support the notion of retesting of 102.20 and the possible extension through psychological and round figure 102 support, with the 4 hour 20 descending 20 days exponential moving average so far keeping the upside limited and maintaining the recent downtrend that commenced on 11th of April on the upside rejection at 105.81. Larger picture bears on the daily chart are fully in play and intact for now, as the price retraced over 76.4% of initial 101.14 to 105.81 rally, keeping the focus at the downside. Slightly we have 102.20 and 102.00 en route towards larger range that commenced in August last year, and it's limited on the downside at 101.14. This is the low of 4th of March 2013, and this level remains so far in focus. Just a quick look at the larger picture chart to understand that the pair is entrenched within this range since July, August 2012, and the price is limited on the downside by 101.14, on the upside approximately 106.20, with the lower boundary of the range being under pressure in the near-term trading action. And finally, from commodities, as we said, the gold regained the strength again following a corrective pullback, better seen on the hourly chart, down to 14.04. This was part of reversal from a 14.38 peak of 2 days ago, recovery peak of bounce from 13.21, a recent low posted on 16th of April, nearly 1 week ago. of the sharp fall from 1590 to 1321, with the price action so far retracing between 38.2 and 50% retracement of entire fall. The pullback, as we mentioned yesterday, it's important that the support at 1400, 1390 will stay intact, and this is what happened yesterday. 1404 was the lowest seen, keeping the psychological 1400 support out of reach, and this was preceding a fresh push higher that so far reached 1430. Our initial resistance at 1427, yesterday's high, has been surpassed on a recent recovery, intraday high, pardon, recent recovery, and now we're looking for test of yesterday's high at 1432, break of which is set to open way towards 1438, 22nd of April recovery high. The structure on the 1 hour chart is still positive, though the indicators are starting to point lower. That could signal hesitation on approach to 1432, 1438 resistances, with the immediate dynamic support seen at 1420, 20 days exponential moving average, and then 1417, 55 days one, while any reversal lower should not exceed yesterday's low at 1404 in order to keep the current bullish structure intact for a possible fresh extension higher. Now the 4 hour indicators are flat at this point. We are in directionless basically mode according to the 4 hour chart. Indicators that are holding a positive tone but showing no direction at this point, with the price action being entrenched between 20 days exponential moving average on the downside and the 55 days one on the upside, that stands currently at 1436. Now both are moving sideways. That sees a possibility of further consolidation before the bulls take control again, and possible break higher. And basically we have two limits: on the downside at 1404 and on the upside 1438, and break of either side is to give the fresh direction, whether it's going to be extension of the recovery rally from 1321 towards 1455, our next target that marks 50% retracement of 1590, 1321 fall, or it's going to be a pullback through 1400 psychological support that might signal a deeper corrective action of entire 1321, 1438 recovery rally. On the larger picture, bears are still in play on the daily chart. Quite overextended, quite extended conditions are still shown, with the RSI slightly moving above the 30% line. That is initial signal for some stronger recovery, though still a weak structure of the daily studies sees that the upside is, the downside is still in near-term focus. From the Ichimoku studies, bears remain firmly in play on daily. An interesting situation is now on the 4 hour Ichimoku study. Says the price entered the cloud, and the basically direction is seen whether on a break above or a break below the cloud. Now we are in the slight sideways mode. The cloud top is at 1455. That reinforces our initial Fibonacci 50% retracement, and basically break above this level is seen as a trigger for some stronger recovery. The Ichimoku studies are initially configured positively, as the price is now in the cloud, holding above Tenkan-sen line, while Kijun-sen is well below and still below the cloud. We need more work towards the upside and clearance of 1455 strong resistance in order to resume recovery. On the downside, the cloud floor coincides with yesterday's low at 1404. As we can see, how the technical analysis give us quite interesting picture, and we can always predict the levels that are going to be supports or resistances just using the different tools of the technical analysis. So far, the cloud bottom, cloud base at 1404 offers quite good support, and yesterday's dip being contained by the 4 hour cloud base shows still quite strong interest for the upside extension and the retest of 1438 and the possible stretch towards strong resistance at 1455. We're a bit long with the gold. Now we're going to move quickly to the crude oil and end our today's session. Since we are in the Ichimoku studies, let's start with this. Daily structure is still very negative as the price is well below the cloud. Now initial recovery signal is seen on the current attempt at Tenkan-sen line that is currently at approximately 89, 85, just under 90, psychological 90 barrier, with the current push higher seen so far as corrective, though the initial resistance at 89.35, a low of 4th of April has, 4th of May has been cracked on a stretch to 89.85. Still a lot of work seen on the upside. Now on the 4-hour chart, similar situation. The price penetrated into the cloud and is currently somewhere in the middle of the cloud, with the upside resistance seen at Senkou Span B, which is the cloud top at 90.34, while Tenkan-sen line is below the price, giving initial positive signal, currently standing at 88.83. Now back to the regular studies, the one that we use more often. The current extension higher shows that price retraced between 38 and 50% of the entire fall from 94, a down leg from 94.78 to 85.90, with the attempt through 55 days exponential moving average that's currently at 89.62 seen as initial trigger. It's important was a break above the recent congestion tops at 89.35, 45. That gives now, as I said, initial signal for a possible stronger recovery, where we'll have a 90 psychological barrier and then 90.34, 50% retracement of the 94.78 to 85.90 descent. On the downside, the recent range floor at approximately 87.70 now offers good support. Ahead of the first initial support is the previous range tops at 89.35, while a solid one stands at approximately 87.70, and any violation of this level would again shift focus towards the downside, and a signal possible return down to 85.90 low of 18th of April 2013. And finally, the daily structure that is still quite negative despite the current recovery rally, seeing not much potential at this point for any stronger recovery. We need to see the regain of approximately 92 zone, where it's 200 days moving average, and the previous support 61.8 Fibonacci expansion of the down wave from 97.68. Break above this level, it's approximately 92.00, would bring some. This is also broken bull trend line on the of 89.35. Break of this barrier would bring some more positive tone and prevent the price from further sliding. Otherwise, we have quite high risk of further extension lower as a part of the broader weakness from 97.68 peak of end of March 2013. And basically this is all from my side. Now if there is any question, please you can type it and submit it now. Yeah, no questions for today. In that case, I would like to thank you all for attending our sessions. Just a quick repeat, we are back tomorrow morning at the same time at 7 o'clock GMT, 10 o'clock local Cyprus time. Stay with us, and expect to see you again tomorrow morning. Wish you a nice day, and of course successful and profitable trading. Good luck.